Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. And I'm also on X, formerly known as Twitter. My name there is @Pless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset, but setups can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. All right, here's my agenda for today, Tuesday, November 28th. First of all, I want to go over news items, economic data and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier in the day. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so first of all, economic data for today. Consumer confidence came out at 10 a.m. and that came in a little bit greater than expected but lower than the previous number. And then the not shown here, let's take a look at it. This was a comment from FOMC member Waller. That came in right around 1037, indicating if inflation consistently declines, there is no reason to insist that rates remain really high. Very dovish comment, and the markets rallied on those comments. Kind of strangely, there were kind of opposing comments from another Fed member, Bowman, but I guess the market chose to ignore Bowen's comments and focused on Waller's comments. And we'll let's go ahead and take a look at the S&P 500. So this was the reaction from the from Fed Waller's comments. Fed member Waller's comments, and that was a launch off of the SPX 4545 volatility trigger. All right, hey Stephen, welcome. I'm just getting started now. All right, so again, comments from Fed member Waller launches the S&P 500 higher. There was also a 7-year note auction right at 1 p.m. Apparently it did not go very well, but there was a small reaction back down to the 45 volatility trigger. Now SPX is trying to move higher again. All right, for the rest of the week, on Wednesday, GDP report, economic data comes out at 8:30 a.m. Eastern Time. On Thursday, PCE data at 8:30 a.m. Eastern Time. That could be a market mover, important data. And then on Friday, PMI data comes out at 10 a.m. and then Jerome Powell is speaking at 11 a.m. All right, note also that the jobs report that normally comes out on the first Friday of the month for the previous month apparently has been pushed back to next week. I guess that was possibly because of the holiday last week. But anyway, the jobs report will not be this Friday. My understanding is that it will be next Friday. All right, so again, you've seen there's a variety of Fed speakers throughout the week. All right, so let's take a look at positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day 1-hour chart in Thinkorswim. First of all, I want to point out the key turning points. This is the beginning of the current rally, Monday, October 30th. Traders on Friday were buying puts, concerned about weekend risk. And then on Monday, those puts started to lose value, implied volatility dropped, and those puts quickly lost value. Market makers could, that were short futures to hedge their delta exposure, could buy back their short futures, and implied volatility collapsed, leading to a huge put Vanna rally. The next event is this Friday, November 10th, for lack of a better term, a Magnificent 7 rally, and then the rally continued higher with the lower than expected CPI report on the 14th. Note during this time, initially on the 30th, market makers' position on the gamma curve was quite negative, and it has shifted to positive now as price has moved up from around 4,100 almost up above or around 45.50 now. And note in the positive gamma environment, more consolidation rather than strong trending markets. All right, so those are the key turning points. There are also some levels that I want to point out on this chart. First, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. It's updated once a week. I update this over the weekend. And then the dashed blue lines are showing the lower and upper daily expected move. This is updated once a day, also based on the options market. A very narrow range, plus or minus around 18 points for SPX. That's what that's how the options market was pricing in movement for today. All right, the next levels are the Spotgamma levels. These are proprietary Spotgamma levels available to Spotgamma subscribers, shown on a variety of trading platforms. Again, this is Thinkorswim. First of all, there's the put wall at 4,400. That is the strike with the largest net negative gamma. It can be expected to act as support. The next level up is the volatility trigger at 45.45. I was showing that on the ES chart, acting as support today. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And then above that is the 4600 call wall. That's the strike with the largest net positive gamma. That can be expected to act as resistance. And then I also forgot to point out the absolute gamma strike at 4500, just in the middle of that range. That's the strike with the largest absolute positive and negative gamma. So gamma concentrated right in the middle of the 4400 to 4600 range. And it looks like the potential range, unless something changes, potential range going into the end of the year is potentially between 4500 and 4600, unless there's something that changes, options expiration, the December FOMC meeting, something like that. All right, so those are the key daily levels from Spotgamma, as well as the expected moves for the day and for the week. All right, let's take a look at a one-day chart just to get a closer look at the levels that are in play for today. This is a one-day, 1-minute chart. Here's that 45.45 volatility trigger, acting as resistance earlier today and now as support. Note that level did move lower from yesterday. So volatility trigger now at 45.45. The next level up is this 45.50 level. That was noted as support in the Spotgamma AM Founders Note. And now may be acting as support. We'll see if that holds. All right, let's take a look at Bookmap now. So in Bookmap, I have my own cloud notes, and I do that so I can see, excuse me, a combination of levels. So there's that SPX 45.50 level that I just pointed out. There's the 45.45 volatility trigger acting as resistance, then support, support again. I also have SPY levels on this chart. Here's the SPY 455 level. That's a large gamma 2 level. And the Spotgamma levels are shown with a white background, red text, and a white line on the chart. And then just the round numbers shown with yellow. All right, so I have SPX levels, SPY levels. Also, I have the upper daily expected move for ES shown on this chart. Note there is a difference in price between ES and SPX. And today that difference is somewhere between 8 and 9. I'm using 9. It's a little bit closer to 9. Excuse me, sorry. So I'm showing SPX 45.50 at ES 45.59. So ES minus SPX is 9 points. and I post all of the index relationships that I'm using for the S&P 500 and NASDAQ. I post those in Discord every day in the Options-Doug chat channel. Typically, I give I wait about 30 minutes for that information to settle out before I post it in Discord. All right, so the levels in play, obviously the 45 level, the most important level today, the volatility trigger. And note the session volume profile showing the highest amount of volume for the day concentrated at that level, and also the point of control there. That's the purple line, the solid purple line, point of control for today. All right, let's take a look at NASDAQ now. For SPY, the volatility trigger also shifted lower. The put wall shifted lower quite a bit from 454 yesterday, which was an important level, down to 405. So 405, of course, not in play. And then the absolute gamma strike shifted higher to 460. And we'll take a look at setups in a few minutes. Let's go to NASDAQ now. And I want to take a look at QQQ levels and NDX levels that are played for today. So I'm going to start with a chart of QQQ. So the QQQ volatility trigger, also an important level for today, acting as resistance, then support, and maybe support again. Note that level did move up from yesterday. And also the 390 level, acting as resistance earlier today. 390 is the absolute gamma strike, and for QQQ, the call wall moved up from 390 to 400, so moving that potential ceiling for price for QQQ up to 400. That is bullish. All right, so for QQQ, the volatility trigger and call wall moved higher. Let's take a look at NDX. Here's the 16,000 level, large gamma 1 level for NDX. That has been an important level, acting as resistance earlier today. Let's go back to Bookmap. And just like the S&P 500 ES, I have my own cloud notes here. So I'm showing QQQ levels. There's the 389 volatility trigger acting as resistance, then support. Looks like support again. Here's that 16,000 NDX level. And note there's also a difference between NDX price and NQ price. Today I'm using 40. And that NDX to NQ difference moves around quite a bit. It may vary somewhere between, let's say, plus or minus 2 or 3, 4 points a day. So I'm using 40. All right, so I have QQQ levels, NDX levels, also the big round numbers for NQ shown with red. All right, Wavy, you're welcome, and thank you very much for your kind words. All right, so that's NQ futures in Bookmap. Again, for QQQ, the volatility trigger and call wall shifted higher, and for NDX, the Volatility trigger shifted slightly higher, not by a significant amount. And again, we'll take a look at setups in a few minutes. All right, so let's take a look now at gamma notional to see how market makers were positioned on the gamma curve at the beginning of the day. This information comes from the Spotgamma AM Founders Note, available to all Spotgamma subscribers. I'm just going to show a portion of the information they make available. This is gamma notional for the S&P 500, NASDAQ, and Russell 2000. This shows how market makers were positioned on the gamma curve at the beginning of the day. Note all these numbers are positive. This indicates, in this position of the gamma curve, for an index, traders are short calls, market makers are long calls. That's the assumption that Spotgamma makes. And in this position, they have to trade against price to hedge their delta exposure. Now, this is at the beginning of the day. It's changing during the day. Again, all these numbers are positive, but less positive than yesterday. Let's take a look at the Vanna model to get a graphical representation of what this means. I'm going to start with SPX. This is the Vanna model. What this chart is showing is market makers' delta notion of their delta exposure on the vertical axis and the spot price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. That's the curve that we want to take a look at. So this curve, this V-shaped curve, is very typical of a positive gamma environment. Let's take a look at price. Right now, SPX is trading right around 45.53. So that's somewhere between these two lines, right at the bottom of the curve. So at this current position, there's no Vanna tailwind or headwind. If price continues to move higher, market makers' delta notional will start to increase. Remember, market makers want to always remain delta neutral. So market makers will have to sell futures to hedge their delta exposure as traders are taking options positions in the SPX. And on the other hand, if price starts to decrease, price will drop below the volatility trigger. Market makers' position on the gamma curve may shift to negative or more negative, and market makers will have to start selling futures to hedge their delta exposure. And that would be as SPX approaches 4,500. Right, so far near the bottom of the curve in a very neutral position. Let's take a look at SPY. SPY currently trading just below 455. Somewhere between these two lines. So this is showing a very slight Vanna tailwind. If price moves up towards 460, toward the call wall, market makers may need to buy back short futures to hedge their delta exposure, applying that would give some Vanna tailwind to price movement. All right, note SPY, the curve is quite a bit different than SPX, and SPY gamma notional is just barely positive at 52.1. So this curve is typical of a more of a less positive gamma position. Let's take a look at QQQ. QQQ currently trading right around 389, right around that volatility trigger. So close to the bottom of the curve. All right, so based on this, my thesis for the day was looking for lower volatility range day. That's my typical thesis in a positive gamma environment. All right, let's take a look at some setups. I'm going to start with the S&P 500, and I'm going to start by looking at what options traders are doing today. So this is the hero signal. This is available from Spotgamma to subscribers. Hero is hedging impact real-time options. So everything that we've looked at so far, other than Bookmap, is static data based on gamma-weighted open interest that is updated once a day, sometime during the night. Spotgamma provides their own proprietary algorithms to this open interest data, and that's the basis for my planning process, my positional analysis. Now we're going to take a look at real-time data. So this is hedging impact real-time options. What this chart is showing is price for SPX with a white line, and then the hero signal showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. Spotgamma does have separate signals for all these instruments, but all these instruments have an influence on the S&P 500 futures, and that's what we're really interested in here. All right, let's zoom in on this chart. This is the cash open right here at 9:30 a.m. Eastern Time. And both the hero signal and price were really chopping around up until around 10:37 when those comments from FOMC member Waller came out. Not really any leading indication from the options market. But what we can do is separate out puts and calls to provide a little bit more clear signal about what was going on then. So what this is showing, the rising orange line is showing that traders have been buying calls today. That's also shown by the positive notion of value. They've also been buying puts. That activity is, sorry about that, nothing I did. So that activity has been fairly continuous all day, shown by the continually falling blue line. But right at 10:37, call buyers jumped in, confirming the move higher. When traders buy calls, market makers sell the calls, and they have to buy futures, ES futures, to hedge their delta exposure. And note that activity continued up until about 11:45, 11:40. And as call buyers took their foot off the gas, traders continued to buy puts, price moved lower. So good long setup in the morning, 10:37, if you were patient to wait through all that chop, and then the reversal lower as the call buyers took their foot off the gas right around 11:40, 11:45. So let's go take a look at Bookmap. At both of those setups. Let's go back to ES. I'm going to first zoom in on this long setup in the morning. So there were some clues in Bookmap before that move higher. Zoom up just a little bit. So first of all, let's move up a little bit more. You can see on Bookmap, price was making higher lows, following a nice trend line up. Second clue, large traders were in buying with iceberg orders. That's shown by the rising light blue line. These are not large, but large traders were buying with iceberg orders. Again, they used to hide their size. And the next clue was all the liquidity in the order book. That's shown by the heat map in Bookmap. That's a history of limit orders in the order book. There were a lot of buyers with limit orders down right around 448, 449. So those were the clues in Bookmap to look for along higher lows, iceberg orders, large traders buying, as well as the liquidity at the limit, resting limit orders to buy at 448, 449. And then there's this quick launch higher when Waller made those comments. Notice the volume dots showing aggressive buyers. Volume dots are showing market buy minus sell. Magenta dots indicate there are more sellers than buyers. Green dots indicate more buyers than sellers. Quick move up to 455, and that is from SPY 454, shown by the yellow line there, the label you can't see, just above the 45 level, up to 455, consolidation for about a half an hour. Then ES moves up to 456. Draw a trend line here. Not exact, but price starts to make lower highs as again call buyers took their foot off the gas and they continue to buy puts. Large traders start selling with iceberg orders, shown by the falling light blue line. And the buy stop orders that had fueled the move higher, shown by the rising yellow line, that levels off. CVD, cumulative volume delta, also levels off, and price moves lower. So good clues in both options, hedging activity, Hero, as well as a Bookmap for the long setup in the morning, as well as a short right around 11:45. All right, so that's the S&P 500. Let's take a look at NASDAQ. Pretty similar chart pattern here. Let's go take a look first at what options traders are doing. Let's go to NASDAQ. Just like the S&P 500, this is a combined signal for NDX and QQQ. So in this case, traders were actually buying calls before the sharp move higher at 1037. That's shown by the rising orange line here. Consolidates, then they start buying calls aggressively again. And note also, initially traders were buying puts. That's shown by the falling blue line, and starting just before 10 a.m. they started selling puts. That's shown by the rising blue line. So from about just before 10 a.m. both the blue line and the orange line were rising. And according to Spotgamma, that's a very powerful directional signal when traders are buying calls and selling puts, both positive delta positions. That's a very bullish signal. Clean that up. And note, just like the S&P 500, when the call buyers took their foot off the gas, price started to move lower. All right, let's go take a look at the Bookmap. So just like the S&P 500, NASDAQ was making, let me zoom just a little bit here. NASDAQ was also making higher lows. Not much support from large traders with iceberg orders. Launching point right at VWAP. Aggressive buyers come in. Remember, traders had already started buying calls and selling puts. Quick move up to the 16,000 level, a retest of the 389 volatility trigger, and then price moves higher. And just like the S&P 500, right around 1145, the buyers are exhausted. Call buyers take their foot off the gas, and price moves lower. And note now on this move lower, first of all, buy stop orders help to fuel the move higher, shown by the rising yellow line. That activity levels off. Then as price starts to drop, sell stop orders help to fuel the move lower, shown by the falling yellow line. Also a lot of aggressive sellers come in, and you can see the clear shift in order flow. At the top there, aggressive buyers shown by the green volume dots. Aggressive sellers start to come in. Price makes a series of lower highs. Again, as traders took their foot off, call buyers took their foot off the gas. All right, so there's a NASDAQ long setup and a short setup. Let's go back to Hero. And another signal I always like to take a look at is this Magnificent Seven. This is a combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. So far for the day, traders are net taking positive delta positions. That's shown by the rising purple line, as well as the positive notional value. All right, Kite Attack asks, hello, Kite Attack asks, can you explain hero parallel up and down of hero, and when the orange and blue line cross each other? All right, so as far as line crossing, I don't put any weight on that. I'm looking more at the direction, the overall trend. Now, when both lines are moving together, in the example that I showed earlier, I think it was for the S&P 500. Well, no, let's go back to NASDAQ. So I know it was for NASDAQ. Traders are buying calls, they're selling puts. Both of these are positive delta positions. So that means that traders are taking, again, positive delta positions, and market makers have to buy futures to hedge their delta exposure. So this is just, according to Spotgamma, they indicate this is a very strong directional signal, in this case bullish. So being able to separate out put and call transactions adds some value here. And again, the crossing of lines, I'm just looking at the direction. There's no, I'm not aware of any crossover signal. It just something to pay attention to. All right, hope that answers your question. You're welcome. All right, let's take a look at some stocks now. So first of all, and here, this is my watch list. These are the stocks that I follow. Another question, Hari. Where to learn more on how to use Hero and Magnificent 7. Go to well, first of all, you can watch my webinars. They're free and available to everyone. And I stream every day at 1:30 p.m. Eastern Time. I talk about this information every day. If you need background information, you can go to, there are two sources. First of all, Spotgamma.com has free resources, a help center. You can look at information there. Also, the Spotgamma YouTube channel used to have more content, and now most of their content is just available to subscribers. But there is some information on the Spotgamma YouTube channel as well. But if you want to learn, so that would be for the background information. If you want to learn how to use it, I'd say continue to watch my streams. Again, free and available to everyone. Live daily at 1:30 p.m. Eastern Time. Also, archives are available, the recordings on the Bookmap YouTube channel. All right, let's take a look at some stocks. First of all, I want to take a look at Amazon. Note the flow alert here. Timely alert for that reversal higher confirmation. Let's go take a look at Bookmap. Go to Amazon. And there's that V reversal higher as traders started taking positive delta positions, and that alert came in. Not a lot of range on Amazon, but good for a long. All All right, the next is Microsoft. And if anybody has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, the next is Microsoft. Note 380 is the call wall. Let's go take a look at Hero first, see what options traders were doing in Microsoft. And this is a pretty typical pattern. Options traders taking positive delta positions in the morning. They take their foot off the gas anywhere from maybe 11 to 12:31. It could be as early as 10. But typically this is about the typical time, 11:30 before lunchtime. Options traders take their foot off the gas and price consolidates. In this case, moves a little bit lower. So a couple of ways to approach this. You could, as price reaches this high, sell a call spread, buy a put spread. I would not necessarily buy a put. I'm just looking for consolidation. I'm looking for a price to stay below a certain level. So an at-the-money put spread or a call spread, selling a call spread would be a good strategy there if you didn't take the long at the when this alert came in. All right, the next is Microsoft. Note 380 again is also the key gamma strike. So that's the call wall, key gamma strike. Microsoft reached that level earlier today. Note the timely flow alert that came in wrong tool. Came in just a minute or two after the cash open. Let's see what traders were doing. So in the morning they were buying calls, shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Again, the very typical pattern. Traders take their foot off the gas, price consolidates and moves lower. All right, let me check for questions. All right, again, Hari, you're welcome. Alex asked, what does the word flow mean? What does the word flow mean in the hero line? That's a fairly new signal, flow alert. That just signals significant or high options activity. It's just something to get your attention. That can act as a confirmation or a reversal signal. So you really have to, once you see that alert, I watch Hero here as well as Bookmap to make a decision about what to do about it. But again, the typical pattern. Buy a put spread, sell a call spread around 11, 11:30, 12. And that can be more effective in a positive gamma environment where expectation for large movements are not as high. You don't, again, not looking to buy a put here, but again, a trade that says all I want price to do is stay below the certain level. All right, that's Microsoft. Let's go take a look at Bookmap. Again, 380, the call wall, key gamma strike. Price breaches that level early in the morning, does a retest of the 380 level as well as VWAP, and continues to move higher to the high liquidity at 382 and 383. Note these levels of liquidity often come in the order book at the cash open. Limit sell orders above price, and these orders often will remain in the order book until they're filled, and they can act as a magnet for price. Just like the indices, Microsoft breaks the uptrend, does a retest of 382 as options traders take their foot off the gas. All right, let's go back to Hero. And note they really took their foot off the gas. Right at 11:30, they started taking negative delta positions. Let's take a look at NVIDIA. And Joel, I'll get to USO and GLD in just a minute. Shane asks, what triggers the alert? That is something that is proprietary to Spotgamma. So they have developed the algorithm for these signals. I think they continue to work on the signals, but for Spotgamma subscribers, Spotgamma did a webinar several weeks ago about the alerts. So if you do subscribe to Spotgamma, you can go back in the archives and take a look at that video. But my takeaway from it is just significant or high options activity, something to get my attention. All right, let's take a look at NVIDIA. Here it is. Kind of a weak day here in NVIDIA. So in the case of NVIDIA, traders are selling calls. That's mainly driving price. They're also buying puts, shown by the falling blue line and the falling orange line, showing their traders are selling calls. Notional value is negative for both. Note 482.50 is the hedge wall, and that looks like that's around the upper end of the range for the day, acting as resistance. Here's another flow alert. Again, just signaling significant options activity. And good to get your attention. Note the alerts also are shown here. So it's kind of a constant stream of alerts. All right, let's go take a look at Bookmap. Take a look at NVIDIA. There's that 482.50 level, hedge wall. Price moves up to 483, then moves lower as traders were selling calls. When traders sell calls, market makers buy the calls, and they have to sell stock to hedge their delta exposure. Right, one more. Let's take a look at Tesla. And then Joel, I'll get to USO and GLD. Right, just the opposite of Tesla, very Nvidia, very bullish day here in Tesla. Let's go take a look and see what options traders are doing. Go to so traders are taking positive delta positions. And that activity really doesn't get going until price starts moving. So this is kind of unusual for Tesla, with price really leading. But it looks like Tesla started moving up right around 1037 with Waller's comments. And then the call buyers came in confirming the move sometime later. So kind of unusual for Tesla. Typically there's a very direct correlation between options trades, hedging activity, and price action. This case a little bit delayed, but in the afternoon, starting right around 10:30, 10:37, confirming the move higher. So that's a little bit more clear when you look at the total signal. Continuing to confirm the move higher. And note the call wall up at 250. That's also the key gamma strike. If price continues higher, that would be a target. Let's go back to Bookmap. Note the high liquidity, especially at the zeros and the fives. Also some liquidity, some sell orders in the order book before the cash open. All right, let's take a look at USO and GLD. Again, I don't have those in Bookmap. We'll take a look in Hero. I'll start with GLD. Gold. Bullish day in gold. Traders taking positive delta positions. They're buying calls. Several timely flow alerts. All right, that's gold. Traders buying calls. Market makers sell the calls. They have to buy GLD shares to hedge their delta exposure. USO, not a lot of notional value here, but it is has been positive. Very small. All right, Joel, there you go. All right, let's circle back and check on the S&P 500. Looks like price is consolidating. Let's go to Bookmap. So kind of a round trip. Back down to 45.45. In the morning, price consolidating below that level, and then in the afternoon, price consolidating above. Point of control still right at that level, just above 45.45. And Joel, you're welcome. Let's take a look at NASDAQ. And in the morning, the kind of the dividing line was the 389 volatility trigger, and now price is really spending a little bit more time below that level. So in this case, for NASDAQ, the point of control is down below the volatility trigger. Now it looks like NASDAQ is trying to move lower. Some aggressive sellers coming in. Let's check the hero signal for NASDAQ. All right, hero continues lower for the S&P 500. Same for NASDAQ. Check the Magnificent Seven. Also now shifting lower since about 2 o'clock. All right, my time is up. I think I've answered all the questions. I want to thank everyone for watching. Thank you very much for your questions and comments. And remember, tomorrow GDP data comes out at 8:30 a.m. Eastern Time. May or may not be a market mover, but we'll talk about it tomorrow afternoon. All right, thanks again, everyone. Have a great afternoon, and I will see you tomorrow. Bye.